Market expectations are quickly changing. Ed Yardeni saying a string of 75 basis points rate hike is what he's recommending or what he's looking at. Where do you sit on this camp, 50 or 75 or even 100?
Good morning. Yes, we're still in the 50 camp. We believe the Fed will deliver a series of 50 basis point rate hikes. I think we've moved into a world where inflation has stayed, frankly, much higher and for longer than the Fed expected. And so they've had to, in their communication, open the door, I guess, to, the possibilities of more aggressive rate hikes. I think the simple way of explaining it is that if they don't get inflation under control now, they may have a 10-year inflation problem, and we go back to, the economic circumstances of the 70s. And I think equity markets are starting to reconcile with that prospect.
So you're here in Asia. If the Fed gets aggressive, and let's just say they do, what does that mean for other central banks here in the region or elsewhere in the world? Are they likely to follow down the same path?
Well, I think it's a really important question. I mean, if you were to ask central bankers, they would say they set monetary policy for their domestic economies. But I think we all know that in today's world, the global economy is heavily linked. For the FX markets in particular, if you were to see that kind of an aggressive move from the Fed, you'd likely see the dollar strengthen and currencies in the region weaken in response to that. So for central banks, they'll be faced with the question of, do we have to lift interest rates in a similar fashion as the Fed to make sure that our currencies don't depreciate excessively, which then raises the prospect of even more imported inflation. And so we get into this sort of self-reinforcing negative loop, which we think is very negative for risky assets.